Welcome to the Economy Magazine at I-24 News, where we provide a daily view on the world markets and the global economy. I'm Natalie Ehrlich. Coming up today, Toyota, the latest automaker to put the pedal on driverless cars. And political instability in Egypt bursts the country's construction bubble. Let's start now with the financial headlines. Well, Asian shares rose on Wednesday thanks to a rally in oil prices the night before. Japan's Nikkei rose 0.75%, the Hang Seng up 3%, and the Shanghai up 0.5%. Well, European stocks also traded higher on Wednesday. By the afternoon, London's FTSE advanced 0.46%. The German DAX rose 1%, and France's CAC up 0.65%. U.S. equities also seem ready for a strong rally ahead of the open, with the Dow futures pointing nearly 14%. We'll have expert analysis on the market movements later in the program. Well, U.S. President Barack Obama is confident that Congress will ultimately back the Trans-Pacific Free Trade Agreement. On Monday, 12 Pacific Rim nations finalized that deal, creating the world's largest free trade zone, also symbolizing a major victory for the U.S. president. He still faces bipartisan opposition, and the accord must be approved by Congress for it to go into effect. The White House was also hopeful that the accord would encourage China, a non-participatory country, to adopt some of those TPP provisions.
This does put pressure on China to raise environmental standards, to raise labor standards, and to incorporate the kind of intellectual property protections that are included in the Trans-Pacific Partnership Agreement.
This agreement has the strongest labor standards of any trade agreement in history, including setting fair hours, prohibiting child labor, prohibiting forced labor. It includes the highest environmental standards in history and prevents overfishing and makes sure that wildlife trafficking isn't decimating wildlife that are a world treasure.
On the backdrop of China's economic slowdown, as well as the drop in commodity prices, the IMF has downgraded its outlook on the global economy again. The IMF's forecast for emerging markets fell to 4.4% this year, down 0.2 percentage points from its July update, making it now the fifth consecutive year of slowing growth. The recovery in Europe, meanwhile, as well as modest growth in the U.S., haven't been enough to offset those declines. The gloomy view sets a bleak mood ahead of the fund's annual summit in Peru this week.
Growth was 3.4% last year. We're projecting 3.1% for 2015, 3.6% for 2016. Both the 2015 and 2016 projections are down by 0.2 percentage point compared to what we thought in July.
Meanwhile, on Tuesday, the World Bank said it anticipates Latin America's economy will stall or fall slightly this year. The World Bank statistics for 2015 are more optimistic than the IMF's, which is predicting the first recession for the Latin American and Caribbean region since 2009. The zero growth outlook for 2015 contrasts with the previous assessment, which predicts modest 0.8% growth for the region. Still, the bank expects growth of more than 2% in resource-rich nations like Colombia, Peru, and Mexico.
4 años de
4 years of slowdown in Latin America, much more than expected. This began in 2012, and 2015 will be a year of zero growth or slight negative for the region as a whole.
Well, Fox International Channels has purchased the critically acclaimed Israeli-made spy show, False Flag. The series is produced by Keshet International in what is now the largest deal signed with an Israeli TV show. Fox will broadcast the series in 127 countries, an unprecedented number for a non-English TV series. Hollywood Reporter first reported this story. A Channel 2 report in Israel has sparked renewed interest in an oil find in the Golan Heights made months ago. Afik Oil, a subsidiary of the American oil corporation Genie, has been active in the southern Golan for half a year and has 3 exploratory drills in the region. The company submitted a request to the Energy Ministry just before the holidays to perform additional tests on oil production in the Golan. The company estimates that it could find billions of barrels of oil, which will easily provide all Israel's oil needs. Israel consumes 270,000 barrels of oil per day. Well, Japanese automaker Toyota Motor Corporation is planning to launch driverless cars in the market by the year 2020. Our economy correspondent Daniel Roth now reports on the latest developments.
Toyota has shown the world a glimpse of their first foray into self-driving cars. The model they are working with is a Lexus GS, and it is the latest in a series of advances in the field by various auto and tech companies. This model is only highway-ready right now, as the car's sensor system is not advanced enough to try to go it alone on city streets.
The car that we have here is capable of independently driving from the entry of the highway to the exit.
Last month, Toyota announced that it will be investing $50 million in research into artificial intelligence for automobiles in joint work with Stanford University in California and the Massachusetts Institute of Technology on the other side of the country. The aim is to have something roadworthy within 5 years.
We aim to be operational by 2020, the year that Tokyo will welcome the Olympics.
Toyota is not alone. Google has logged over 1 million miles of driving without safety drivers in autonomous mode since 2009 in Mountain View, California, and more recently in Austin, Texas. As well, Apple has been rumored to be in the mix, and Nissan has been working on similar projects, saying they will have high-level autonomous safety features by 2018. And safety seems to be at the forefront of the reasoning for this research.
We are contributing in this way to lowering the number of the deaths and injuries on the roads, but also relieve the flow of traffic on highways, which are often congested.
There are questions, though, particularly surrounding the implications these advances may have on employment. Last spring, Daimler announced it would be working on self-driving trucks. This could have serious implications for the employment of the 3.5 million truck drivers that the American Trucking Association estimates are on the road in the U.S.
And now for a look at world markets and interest rates. We are joined on set by Joseph Grincorn, the CEO of the Morris Group. Thank you very much for being with us today.
Thank you for having me.
Well, we're seeing the markets rally here across the board. How long can we expect this optimism?
Well, I definitely see it happening for the next several days and weeks. I kind of call this the calm after the storm. As you know, there's been a lot of volatility happening over the past several weeks. And I think investors have realized that things have been overblown. And there's really a lot of value in the U.S. markets right now. So I think it's a great time to buy. And I see this going, for the long run.
All right. And we did see that rally movement in large part because of the rise in oil prices. How important is that?
You know what? I think cheap oil is now the norm. I think, once people start to realize that these are the prices, it's definitely going to add money back into the economy. All consumers have more money to spend on, all like various things as well, from living to, to investments. And I think, cheap oil is here to stay right now.
All right. Well, you mentioned the strength in the U.S. market. What do you project in the long term? I really believe that this is the only market to invest in right now. China is weak, Japan is weak, Europe is weak right now. I think, now with the rally, you see a lot of old money that was sold off coming back into the U.S. market right now. So I see this rally continuing, hopefully for the next year or two. All right. Well, staying with the U.S. now, what about the Fed? When can we expect that rate hike?
Well, I don't have a crystal ball or anything, but I first predicted, back in 2014 that there would be no new rate hikes till somewhere in mid-2016. Everything is very stable now. Everything is stable right now. There's no inflation, very, very slow to moderate wage growth. So, she's very data dependent, as she keeps saying. And, now the data, worldwide GDP is slow. So she wants to keep everything very, very stable right now. So I don't see anything happening in the near future.
Right. Initially, we saw that rate hike expected for September, which has been delayed. If we see more trouble out of China, could that be delayed even further?
Could be. I'm actually looking from China to come out with a massive QE program right now, to really help jumpstart the economy. But again, she's being very, very patient, as she said in the past. And again, I don't see anything happening to 2016. And even if it does, it'll be moderate, maybe a quarter of a basis point at best. And very, very slowly, from there on in.
Well, thank you very much for joining us. Very much appreciate it.
Thank you.
Moving on now, Egypt has one of the most unequal housing markets, largely attributed to the widening gap between incomes and house price inflation. Here's that story.
The bustling city of Cairo. Before the toppling of President Hosni Mubarak in 2011, a construction boom had seen new housing developments mushroom up around the Egyptian capital. But they're out of reach for many. Among them, Galal, a 24-year-old electrician who still lives with his parents.
Whatever I do, and despite all my efforts, even if I keep working and save my money for a very long time, I will never be able to buy an apartment.
Almost half of Cairo's population of about 20 million lives in informal settlements with poor infrastructure and buildings often constructed with no permits. At the same time, the government says there are 1.5 million vacant homes across the country. Political instability has now burst the construction bubble, and empty and unfinished buildings flank the ring road that circles the city.
The reason rent levels are not regulated is because rents and land have become merchandise, and the state is the biggest landowner in Egypt. All policies support increasing the benefits and the income from land sales. This affects another social issue, which is housing.
But the Egyptian government says measures have been taken to ensure state-owned vacant homes go to people who deserve them.
We issued a social housing law which puts restrictions on the selling and reselling of units. Not just anyone can have access to these units, because they're reserved for those who are really in need. We're providing support for this social strata, and there is an income ceiling. People cannot request a unit if their income exceeds the ceiling.
26% of the Egyptian population lives below the poverty line. They'll be hoping the empty buildings are not just an empty promise.
And now for the stories we didn't want you to miss. We are joined on set by our one and only Daniel Roth. So what did you bring today?
Today in Haaretz, David Rosenberg, who's one of their economics writers, is positing what might happen in the Israeli economy if, in fact, this sort of erupting violence and ongoing occupation is going to turn into a third intifada. So he's sort of imagining, it's not, I don't think anyone's saying that it is right now an intifada, a third intifada, but he's imagining what might happen. He's looking back at the first two. The first one starting in 87 and ending at about 93 didn't take a huge toll on the economy. It was largely nonviolent. There was a recession in 1989, but that had more to do with sort of stabilizing the economy from the 1985 redo, basically, of the currency. In 2000, there was a hit to the economy, and this was real. That was a much more violent intifada, but it also had to do with the bursting of the dot-com bubble in the same year, in 2000. So what to expect now? Well, Rosenberg is positing that we can expect a very hard hit to the economy. Number one, foreign direct investment was hundreds of millions of dollars in the first intifada. In the second intifada, it was already $8 billion a year. It's already, at this point in the year, we've already seen $8 billion of foreign direct investment in 2015. So he's saying you're talking about double the reliance on foreign direct investment. And when you sort of factor in the change in media landscape, that in the first intifada, people saw the news around the world twice a day, morning and evening. By the time the second came around, you had access to 24-hour news. Now what we see is grassroots social media, all the time, everywhere media. So the focus will be on this country. And we're going to start to see people start to pull their money out. You're going to see China start to pull their money out. You're going to see tourism drop. You're going to see a hard hit.
That's pretty
surprising. This is what he's saying. Even China will start to get cold feet if months and months of violence and images of
well, they'd be more concerned
rights.
about the violence, perhaps not on the human rights. But what else did you bring for us?
So the next story is very interesting. We reported earlier this week that BP was set to pay about $21 billion to the U.S. government for the 2010 oil spill. This is not entirely true, it turns out. About 3/4 of that payment is tax deductible. So they can get tax back on about $15 billion. That means about $5.5 billion of it they're going to have to pay.
So is this symbolic?
It's At best symbolic. I think what the real story here is that it's actually not a big hit to BP at all, and it's a slap on the wrist for something that killed 11 people and cost the world, cost the environment an incredible amount of money and life, and took a huge hit to the Gulf Coast there. So yeah, I'm not even sure if symbolic is the right word.
All right. Well, how does this go about? I mean, doesn't the U.S. want to make gains here?
We're starting to see a little bit more in terms of this kind of law shifting so that people actually have to pay. It's not there yet at all.
All right, so still siding with the corporations. Thank you, as always, for coming on our program, Daniel Roth. Very much appreciate it here for Media Watch. That wraps up our show today. Stay tuned every day for all your global business coverage from the Jaffa Port in Tel Aviv. I'm Natalie Ehrlich. Thank you very much for watching, and also be sure to check out our website. It's i24news.tv. There we have pages for you in French, Arabic, as well as English. Thanks again.